Today we're going to talk about Contango Ore, why this junior producer is flying under the radar, why it is one of the most interesting junior producers in the whole sector that nobody is talking about, and the Trump factor that could bring out outsized returns with this small junior producer that is right before the start of his massive growth phase. Let's talk about it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and months. So this is, as promised, the second part of the Contango Ore analysis. Here's the link for the first video. I recommend you watch the first video first, then this one, because they build on each other. Housekeeping first. I'm not getting compensated by the company. I don't think they even know that I exist. I don't hold any shares. I would be interested, however, to buy shares of this company as a long-term swing trade. I elaborate on that in the end of the video. So let's get into it with a quick summary. Contango Ore, here is why we're talking about it. Here is why I like this stock. So first thing, small junior producer, 60,000 ounces of gold equivalent. That's important, not gold, gold equivalent. However, not every equivalent is created equal. If we want to have additional metals besides gold in the mixture, obviously we want to have silver and we want to have either copper or zinc. I don't care about the other industrial metals. Here we get silver, that's really good, and we get some copper. So that's good exposure. Still not as good if it would have been pure gold, obviously, but hey, it's pretty good. So small junior producer, love that. All three projects by the way, very good, love that. In Alaska, double love that. Why? Because it's the made in the US story. As you know, projects in the US, in Canada, in Europe, those will be the most valuable commodity projects in the new Supercycle. So that's where we want to invest in. Contango Ore has that in spades, and it's in Alaska, which will be the next hot region for the commodity sector. In North America, it has the Trump factor. So love that, all positive. And then the third thing is obviously that they are stepping up their production, at least that's what their plan is, and they are hitting their growth spurt, and that's exactly when we want to invest. So that's where we stand. So let's run through the three projects real quick to get into it. So here we have the three projects. We start with a Manh Choh mine, just started production Q3 2024. We love that. Why? Because that means most of the gold equivalent there, most of the metals are just getting mined. They have not been mined already. This mine is run by a joint venture of Kinross and Contango Ore. Contango Ore only gets 30%. That's not great. Again, it doesn't matter, and we'll get to this in a minute. Then below it, right here, and let me flip to the other slide to that so you can see this more quickly. They laid this out pretty nicely. Here we go. It's the Lucky Shot mine. So now we're getting into the second mine and the second project. Contango Ore owns 100% of it. That's good. Not so good. It's a really small project. At the moment, it's a baby project. They currently have a resource, you can read it in the first line, of only 110,000 ounces of gold equivalent. That is not good enough. Now they say they're fully permitted for mining. That's great. Their plan is within 2 to 3 years to build out the exploration, to basically develop this into 400 to 500,000 ounce mine of gold equivalent, which sounds more spectacular than it is, because with a 10-year mine life that you need to show, that comes out to around 30 to 40,000 ounces of gold equivalent annual production. that's small potatoes, okay? That's nothing. If we're just talking about these two projects, I wouldn't even look at this company. However, first off, 30 to 40,000 ounces of gold equivalent is not a big amount, but it is substantial if you start from a low base like Contango Ore is starting with, who right now has a production of around 60,000 ounces of gold equivalent. Because that means that just by the Lucky Shot mine, they can already increase their production somewhere between 50 to 60%. That is interesting. But the real story is the last mine, the Johnson Tract mine. And if you like this content, if you're like, wow, I haven't heard about this company. Okay, I don't had this information that I'm hearing here, or I'm gonna look deeper into it, then hit the subscribe button. Takes you 1 second so you don't miss a video, you don't miss out on these type of companies that we talk about. We like to talk about companies here on Hot Trades of the Day that not everybody is talking about. So let's get to Johnson Tract. Okay, so Johnson Tract, that is the big project. Why? Well, they currently hold a resource of 1.1 million ounces of gold equivalent. That's very solid. It's gold, silver, copper, and zinc, and lead. We don't care about the lead. Zinc, copper, yes, please. Silver, most definitely, and then gold, obviously. That's what we're in this for. So here's what I like about this project. Contango Ore owns 100% of the project. That is good. Again, the resource 1.1 million ounces, that's good. The goal of the management is to be permitted in 2 years and production in 5 years. I like this for the following reasons. They're not permitted here, which means if we really see the Trump initiative for Alaska pushing up permitting, expanding exploration licenses, expanding new projects, then Contango Ore is massively profiting from it. Why? Because Johnson Tract is the target for Johnson Tract by the management is a yearly production of 100,000 to 150,000 ounces of gold equivalent, which means this is the big mine. If everything works out, and when you hear in mining, if everything works out, it usually means it won't, but we will see, right? But if everything works out, that means that 50% or more of the production from Contango Ore gonna come from this project. So any news on permitting for Johnson Tract will have a significant effect on the share price of Contango Ore. So that's what I like. In production in 5 years, that seems very ambitious, puts us at 2030. Let's say somewhere around 2030 to 2033, I think is very reasonable. But that doesn't matter so much because we don't want to hold this stock. This is not a forever stock, all right? This is a growth story right now where you play out the growth phase and then you sell off the stock. Why? Because it's going to hit a plateau. So right now they're producing around 60,000 ounces of gold equivalent. Their goal is to get to 200,000 ounces with Johnson Tract, right? That means that would put them into a nice mid-tier junior producer, lower end, but still mid-tier junior producer group. Very nice. That's going to put them into valuation over $1 billion likely. Very nice. That means that institutional investors can invest in this. So they want to about somewhere between 3 to 4x their production in the next 5 to 8 years. That is the story we're playing with this. Now, we got to get deeper into Johnson Tract. Obviously, that's the big project. What's really going on there? And again, hit the subscribe button if you like this content. If you're like, ooh, this is interesting. I haven't heard anything about this anywhere else. Hit the subscribe button so you don't miss the videos. Okay, now let's get deep into Johnson Tract. And when we do that, it's kind of like when you were a college student and you went to a bar and you met a girl and you picked her up and you're like, oh man, I found the next Cindy Crawford. And the next morning she walks out of the bathroom with no makeup and you're like, ooh, I'm not so sure about this one. Okay, so this is a very important slide. Let me move this up a little bit. Here we go. To understand what we're talking about. So Contango Ore owns 100% of the project. Great. But they don't own the land that the project is on. They have a lease agreement with a local First Nation tribe, and I don't like that at all. Why? Because if you don't own the land, that creates a risk factor. If you're in mining, if you've followed mining companies, if you have any experience in mining, you know dealing with First Nation tribes can be really tricky and can cause problems that nobody saw coming. So I'm not saying this is going to happen here, but the risk is here because they don't own the land. So that's not great. But again, at this point of the rally, if we're talking about junior producers, you know you're not going to get the perfect stock anymore at a good price. And Contango Ore is at an attractive price right now, and it could become a very attractive company down the road. For that, we're going to have to deal with some fleas. Every dog has some fleas. This one does as well. This is one of them. This is the second one. As you can see here in purple, that is the Johnson Tract project. You can see the wide road that leads to a river. And that's the second thing. The infrastructure of this project is suboptimal. So one of the appealing things about Contango Ore that I have not talked about yet, and one of the reasons is because we don't have time to get super duper deep into it, but let me swing back real quick. So actually, we can use this slide right here. Is when you have multiple mines, multiple smaller projects, that's not ideal, right? If I had it my way, you have a company that has two big mines that are in production, just starting production, or starting to increase their production in the future. Why do we want that? Because then we're going to profit from higher gold prices. So that is actually really good for them. That's something that I like, for example, about Equinox Gold very much. You don't want to have many of the small mines. Why? Because you're going to have all the risk and you're going to have a lot of G&A overlap costs. And you're going to build out the infrastructure for all these small mines separate. Here comes a benefit from Contango Ore. They do something that's called DSO, right? And they call direct shipped ore model. I just love how the Americans always come up with the acronyms and have something for everything. That basically means they take the ore from each project and ship it to the Fort Knox mill. You see that star in the map, which is run by Kinross. It's used right now for the Manh Choh mine, and they plan to do the same thing for the Lucky Shot mine and then for the Johnson Tract mine if that comes into production. And then the ore gets milled there and the gold, silver, copper, zinc, whatever it is, gets extracted there. That is very cost efficient and attractive and advantageous for Contango Ore because that means they don't have to build a mill at every project. They're fairly close by. However, they still have to, and this is what is suboptimal about the project, ship the ore from Johnson Tract project, and here you see how they envision this going, in containers over the river up to the Fort Knox facility of Kinross. That's not great, right? It's really not that great. But here is what I really like. And that is, we have a great project history structure. What do I mean with this? I mean, Johnson Tract is the important project. It's a fine project. It's not a great project, but it's a fine project. But we're talking about a small junior producer here. So a fine project can get us really good gains if we invest at the right time. At the right time is around now, if we get a chance to get in on this company on a dip. So when you develop a mine, it costs a lot of money. When you have to do a lot of exploration, and obviously Contango Ore wants to do a lot of exploration, they want to quadruple their resource at Lucky Shot mine, so that will cost a lot of money. And Johnson Tract, they're probably going to do exploration as well to show that that mine is even bigger. But Contango Ore has money coming in from the Manh Choh mine that they can use to pay for this, instead of regular small junior producers that are just starting out, or explorers that always have to do capital raises and go to the market, and thereby diluting the shareholders. So this is the best case scenario that we have right here for shareholders, where right now we have money coming in from Manh Choh mine. It's fine, it's not billions, it's not the Alaskan Microsoft, but they can use that to develop Lucky Shot mine and advance Johnson Tract a little bit. If Lucky Shot mine gets in production in 2 or 3 years, as they say, let's be a little more conservative. So 3 years, that's 2028. So let's say 2028 to 2030, then they can use that money additionally to finance the Johnson Tract development. They don't have to dilute the shareholders. The dilution risk is lower with Contango Ore than it is with other younger, smaller companies. I love that. Valuation right now is cheap. The NPV of the Johnson Tract project is named at $400 million. And then you have the 2 other projects on top. Current value of the whole company is around 300 million US. So that makes it attractive right now, but we have the great upside of the increase in production, 3 to 4x if things go perfectly. The Alaska Trump factor as the joker, because if this happens and Trump really opens up Alaska, then we're going to see a run on the commodity companies that are in Alaska, especially early development companies, because they will benefit the most from permitting and exploration expansion, license expansion. So we get that free on top. If everything stays the same with Alaska, we get a great growth story in the junior mining space, 3 to 4x in production of gold equivalent. Perfect, and what's even more perfect, the peak of this production should then hit also the peak phase of the gold cycle, and that's when I would sell, because after that, this story is pretty much maxed out. If they are at 180,000 to 200,000 ounces of gold equivalent in production, in order to double that production again, to get another turbo factor going, they need to do an acquisition. That's going to cost a lot of money. You know where I'm going with this. But right now, we're in the sweet spot where, hey, they're still really small and the growth phase is ahead of them. Now, it's not without risk. Do your own research. But you don't find this combination very often, and it's one of my favorite combinations in the market. That's it for Contango Ore. If you like the content, hit the subscribe button. Have a great weekend. We'll talk on Monday. Bye-bye.